Well, Patrick, it's nice to see you again. I think, gosh, the last time I saw you would have been at our European conference last year, maybe.
Absolutely, Rodney.
And here we are today, and we're all meeting virtually. So, you lead the international tax practice for KPMG Advocats, our firm in France. Gosh, a lot of our clients today are focused on liquidity. What's going on in that regard in France?
Yeah, many things actually, and we have updates since last Thursday and also over the weekend. But maybe first of all, I just wanted to say hi to all our colleagues, clients, and friends, and I hope they're all safe and and their loved one too. So, with respect to cash, of course, the French government, like many other countries, have encouraged and have authorized, should I say, some breaks in terms of direct tax payments and social security payments due in March. This has been extended to April. But there is a counterpart. Basically, the French government requests, and only large taxpayers, large companies, and also companies of belonging to groups of those large companies, they request to freeze all dividend payments,
Hmm.
including interim dividends and including also share buyback so for the whole year 2020, starting on March 27th.
Hmm.
So that is, of course, you know, triggering many questions from our clients, and basically um, the concern measures that, in order to effectively commit not to distribute, are really the postponement of direct tax and social security payments, but also the benefit from the French state's guarantee on financing, on external financing. Who is concerned by that? So, as I said, large companies, which means more than 1 billion revenue for last financial year, or more than 5,000 employees in France, and the revenue was French revenue, or companies belonging to groups where one at least of the members exceeds those thresholds. Um, and if companies do not play by the rules, then they are requested, they're summoned to reimburse immediately the cash advances. So basically, all payment or paying basically
Yep.
the tax that has been postponed, or the tax for which a break was authorized. And they would be banned, of course. They would be deprived from the state's guarantee on financing. Plus, in case of tax or social security payments, there would be a penalty of 5% and also a late payment interest of 0.2% per month. So that can be actually a bit costly, and it doesn't only concern very large companies, because for all other companies, even if we don't have that strict measures applying, the French Ministry of Finance has requested some moderation in the distribution policy, and as a rule of thumb, the minister has requested so those uh, mid-size or small taxpayers to reduce by 1/3 their regular distributions.
Gosh, so that's a very interesting carrot and stick approach. On the one hand, there are um, incentives to improve liquidity at the corporate level, but on the other hand, those get clawed back if the company wishes to undertake cash transfers to shareholders and stakeholders.
Yeah,
That's,
this is really inspired by
hmm.
by the willingness to fuse and to really have a general national solidarity around the crisis. So you may distribute dividends within a group if that is really to help another group entity to effectively face cash needs. But this is really to the benefit of the efficiency from a business viewpoint and also from an investment perspective, not from a shareholder's return perspective. So that is a very clear message given by the French state, and so we don't know exactly what could be the next measures, but this is the new normal now.
Well, Patrick, that is fascinating, and it'll be interesting to see how that unfolds in France, and also actually whether other governments continue down the same line. So that is a
Great.
fascinating perspective, Patrick. And well, thank you for your time today.
You're very welcome. Take care.
Okay, well, you too.